your chart and then open it up. I just
No, I did. Okay, let me try it. Open again. Yeah.
Okay. Top right, it says copy. Make a copy and
Yeah. That's it. Yeah. Okay, let me just try to open again. Let's go maybe because this one because it used to work. I mean, it should work.
So in the multi-stock tool, when we go to settings, I basically uncheck all the K lines and we do the D lines. The reason for that are the D lines are a lot smoother and they're going to be a little bit slower. So you're going to be able to see the reactivity and actually kind of get the definition of, what are higher highs and higher lows. They're just going to be less noisy, basically. And I think on each of these... Now? Yeah, I'm recording.
Okay, nice.
And each of these, I think I just have it at like level 2 just to brighten it up a little bit. But the first one, the inputs on these, on the D length, is going to be... Where does it start at? I'm trying to find out where these things start at. I haven't looked at the multi-stock in forever.
Yeah, it's 9. Starts at 9.
14, 40. Okay, here we go. So the first one's going to be 9 and then 3. That'll be this first red one here. And then we have 14, 3. And that'll be... Yeah. All right. And then we have the 44. So the smoothing is going to be for number 3 is going to be 4. And that'll be the blue one. That's the 40.
Yeah.
And then the final one is the 60. And then the smoothing on that is 10. And and of course, that's going to be the purple one. And what it represents is the 9 and the 14 kind of represent what's happening on the 1 and 2 minute charts. The 40 stochastic, the blue one, represents what's happening on, let's say, the 3 minute chart. And then the 60 is representing what's going on in the 5 minute chart. Does that make sense?
Oh, TJ, mute your mic.
So one of the questions was, we'll just start here because it's at 2 o'clock, so we'll just catch some of these, is when you get the blue and the purple, the 40 and the 60 are just embedded straight down, and it looks like it's oversold, like it's going to pop up at any time, but in reality, if you were to take a trade, like right here when it starts to curl up, it would flush down. So some of the things that you're going to be able to use to help you in this is when you just see it flat buried under the 25 level right here, know that we're just in a strong downtrend now. So instead of looking for reversals, when you see that it's just been embedded, especially after it trended down and it just stayed there, that's your good indication when, everything's all red, all these candles are pretty solid. That's going to be an indication that, okay, well, we're just looking for short opportunities. So what you could do is you see how the 9 and the 14 pop up every time price comes back up into the profit wave.
Yeah.
That's a good time to get a re-entry if you miss the sell, or if there is an alignment signal that you missed, or you're looking to add. These are great places to add because when it pops up, notice how it very quickly just goes right down. And that's a good sign that this is a very strong trend, because when the faster stochastics do pop up, they immediately turn back down. They don't hang around like they do here in a bullish trend. So they're going to be very short term, and none of these should close above this profit wave. So these are a couple of good entries that you could catch at any time, and this is just a good way to spot that.
Yeah, so practically they're talking about two fast stochastic, like 9 and 14, which does all the job.
Yeah.
And 60 and 40 should not be stuck to up or bottom, right?
Yeah, the 40 and the 60 are going to be very smooth. You see how the purple is, it's either going to be embedded or it's going to slowly raise to the top and then slowly raise back down to the bottom as the trends are shifting. This is a good example because we have a very long downtrend here, and then we turn around and have a pretty decent uptrend with just a couple of small pullbacks, but we're consistently going up until we finally break through. So one of the biggest setups that I have to show when a trend has ended, this has been like a good long time we've been going down, and that's looking for a divergent setup. What you're looking for is price to make a lower low. So here it's making a lower low, Even if it's equal low, that's fine too. This could be equal or it could be a lower low. But then you're looking for the stochastics, either the 9 or the 14. They're usually in pairs to make a higher high. So what that's telling you is that even though price is still coming down, momentum is starting to shift and we're making higher highs. And that's a very telltale sign to say that, okay, this trend is over with. Because a lot of people will sit here and have a channel, basically. Let's see here. Quite a lot of people like to develop a channel, basically. You know, when they're just doing normal price actions, they'll sit here and put everything inside of a channel. And then what they'll do when they're trading their channels, they'll wait for the breakout of this channel, get it retested, and then they'll start taking the trades. What that divergence shows you is this trend already ended here, and we've seen it here, versus waiting for it to break out of the channel, come back and retest and go through the profit wave. So people are entering here. We're entering way down here because we've seen this divergence very clearly here, because you'll notice it as you start seeing things like this 40 starting to come up here. So you're starting to see things finally trending up, and you catch this divergence. The divergence is always going to happen before you start seeing things start trending upwards. But those divergences are very, very, once you start identifying them, and it takes a while to learn them, but once you spot them, you're going to see them all the time. And it only happens, 3-4 times a day. It doesn't happen very often, but it generally happens at the end of a good, lengthy downtrend that's been steady and consistent for some time.
So this is on 2 minutes, right? Chart.
Yes, this is a 2-minute chart, yeah. And you'll see here, if you don't know, this is a good example. You see how price really isn't the best right here during this time. It kind of doesn't know what it wants to do, so maybe you don't quite know what trade you want to take. So if you were kind of looking at this price action here, and you don't know whether you're going to buy, sell, you don't see any of this yet, so you don't quite know what's going to happen, something that will help you kind of guide you a little bit is when you start seeing the 60 stochastic trending up, you see the 40 stochastic trending up. That's telling you that, well, okay, you're probably looking for any kind of a bullish setup. If you're just, looking for it, that's what you're looking for. And this is a pretty good example of that. When you finally have a bit of a pullback, the stochastics are still trending upwards. When you get a good bullish candle push through the wave, that's a good indication to go long right here, because this is a lot of good bullish momentum. It's been kind of like trending around up and down, not really going very far, but that just shows you if you are looking for buyers or sells, well, there's your answer. The stochastics will tell you which direction you want to trade, especially if we got, say, an alignment like right in this area somehow. Like, let's say it caught an alignment because it got a good bullish signal here, but there's no buy or sell tags around here, that tells you right here, the stochastics that are trending up, they're starting to embed. Those are good examples right here. The 9 and the 14 dipped down, but they quickly went back up again. So these are all good indications that this is a bullish trend and we're looking for buy trades at this point. Get that back. Okay. And one of the biggest things that I like to trade are what they call the quad rotations. And it's basically when all 4 of the stochastics at the same time are down. They come down into the 25 and then they come back up above the 25. The 9 and the 14 are, of course, going to come up first, followed quickly by the 40. And then finally the 60 will start curling up as well, too. That's when you're able to take a trade at its almost absolute bottom. Now, the only downside to this is that when a quad rotation comes, you don't know if it's going to be successful or not. So the only way I would typically take a quad rotation, and this is something that I have gotten so many accounts blown by taking quad rotation trades for no good reason. Like right now, there's really no support. If you could find good support at a level, that's a good way to take it. If it's bouncing off of like a VWAP or an EMA, even like a 50 EMA, that's a good reason to take a quad rotation trade. So whenever you see these 4 just come up simultaneously and launch upwards at the same time, that's what they call the quad rotation. And John's really big on this. And if you've ever been a member of his, he'll call these out over and over and over again, and he's really good for saying, okay, it looks like we're coming to an end here, we're going to reverse, and everybody jumps into a trade and then immediately flushes right back down again after a couple of minutes. So you only ever want to take these when you have some kind of a support, a pivot point on a higher time frame, some kind of a just anything that is significant to give you one more confluence with it. An alignment signal would be a good confluence. If you get an alignment signal and a quad rotation and we're looking to do a buy entry, there's a great entry for you right there.
So your chart is 2 charts, 2 minutes. How are you doing alignment? Do you have other charts for 1 minute?
Yeah, my alignment chart on the right-hand side is on 1 minute. My alignment's over here in the 1 minute, and then I have the 2 minute that I trade off of and look at the stochastics off of.
On the right, it's also 2 minutes.
It should be 1 minute. I may have just changed it around when I was doing the setup here, but I keep it to 1 minute.
So it should be 1 minute. Okay.
Yeah. And this is another example of, again, we're in a clear bullish trend. We kind of pulled back a little bit, but we've been embedded for some time. So again, price isn't quite doing anything crazy here. You don't know what to do. But when the stochastics are just stuck above the 85 level right here, that's telling you, okay, we're looking for buy entry. So when you get a decent signal to go long, that's a good reason. And if you missed any of these entries, these dip back down, you're going to see these again where it dips. We have the stochastics on the 60 and the 40 are trending up really hard, and then they get embedded for some time. So anytime it pulls back, that's a good indication that, okay, you could re-enter or enter for the first time if you missed it, add on to the trade. So these are what these embedded up, this is what this looks like basically. We've seen the embedded down, this is what embedded up basically looks like. It's usually a very strong trend, and stochastics are hard to trade on a strong trend. They really are. The only thing that I've ever been able to kind of use them for is this right here. These usually dip down, and they do not dip all the way down past the 25. They usually dip right around this midpoint like you see here and then go up.
Hey, host.
Yeah.
Could you check the voice chat channel chat? Is my example good? Yeah.
Your
go
2
to the
minutes
chat box
chart
right there.
does not have any alignments. Only on the right, only 1 minute.
Go to the chat box symbol to the.
Yep, I got it.
Yeah, right there. Yeah. You see my picture? Is that a good example of like the 40 and 60 going down with a double alignment?
Yeah, that's beautiful right there. You see how that's starting to dip down right here? Like you already see the 9 and the 14 already trending down, and then the 40 comes right after that. That is a beautiful example of that rotation going straight to the downside. Absolutely.
Okay, all right.
And
I'm starting to get it.
Yeah, and one thing to know too, these are really good for exits. This is a really good point that you just brought up using Jay's example here. If you're in a good trade and you don't know how far this thing is going to run, when the 9 and the 14 both get to the oversold area, you can exit the trade, because typically you're going to see a pullback once these hit. Even if the 60 is still coming down, when these hit and they start popping back up, you're going to get a little bit of a pullback. So if you want to avoid that, and you can kind of see it pulling back up here a little bit, this is a great way to know, okay, time to exit the trade. If you got in here on a good alignment, you see the stochastics are on your side, when these fast stochastics get down to the oversold area, you can exit the trade or take a part of the position off of it. So that's a perfect example, man.
What do you call it? So I noticed that these, like this perfect example right here, usually like the quad rotations, they usually happen on the opposite side of the EMAs. So I'm wondering, how can I have full confidence in this trade to go in?
Typically, any kind of a decent level. I mean, I would say that one of the confirmations would be the alignments. So that would be, I think, one of the first things are, we've got some alignments popping up here. So that's a signal of what we're looking for here. Any kind of a previous support resistance pivot area, prices, if this had come up and this is a previous, area of resistance up here, and then we're also failing it. One of the telltale signs that I look at is, you see how we pushed up really hard, but now we've got some very small wicks. Like these are like, 20 tick candles, but now all of a sudden we've got like 3 tick candles and it's wicking really hard. So the first thing I would look for, you get the alignment signals, that's first. But then when you get that strong candle pushing through and price stays down here and it doesn't immediately pop back up, see how the real close stays right to the very right of this and then it just continues down? That's what I look for. That's my primary setup, as a matter of fact. When I'm seeing this stochastic starting to trend down and I get any kind of like an alignment signal, when I see this first candle and it's a really solid candle pushing through, and then the very next candle is still solid, no pullback, no closing above the profit wave, that's my entry right there. Does that make sense?
Amazing, amazing.
You do not enter on a close of candle. You just wait for next one.
Well, if I'm looking for the first entry to get into a trade, I'm trying to find one because that's kind of a weak one right there. I'll when I see one, I think I've got one that's coming up here in just a minute to show you. That's a good, like this is a candle that closes down and we've got some decent price action and we've been embedded for some time. So that's also a telltale sign too. You can kind of see how long do these trends stay. This is like maybe 20 candles worth. We get a pullback, 20 candles worth. We're getting a pullback. So now we've been going up. We were embedded. We pulled back a bit. Now we came back up again. And we're embedded again. So after a certain period of time, this trend is going to be over with. And obviously, I'd rather have like this be previous, some kind of a support right here. Like we hit some kind of resistance, a key level, pivot point on a 50-minute chart, something, order block, whatever you want to call it. But another tell thing that I'm looking for too, though, is that you see how we've had this big bullish trend. We've had some pullbacks. We're embedded. But now all of a sudden we go from these big, thick candles, these huge candles, to now we're pulling back. The real closes are all over the place. And these dots or these candles are very, very small now. So we get a full candle that closes through. That's twice the size of any of these last 10 candles just about. So in relation to the size of each candle, that's a good entry, especially when you're seeing these start to trend down pretty hardly. Now the 40 is trending down. So now the 40s, the 9 and the 14 have already dumped. Now we've got the 40s dumping. You see the 60 starting to dump. So now you're looking for any kind of a sell entries. And again, if you aren't sure about it and you're not sure what's going on, you could always wait until it comes back up here again and you start seeing again these quick push-ups. We're trending down, but the 9 and the 14 are going to pop up and then quickly rotate back down. There's your re-entry or your first entry if you missed this first one here. That's a perfect re-entry without having to close from green through the profit wave. That's a great re-entry because, again, we've got a weaker price structure, so it's trying to pull up. Even the 9 and the 14 are trying to come back up, but it's not getting anywhere, though. Even though we hit the bottom and now we're rotating up, price isn't moving up, though. You look how when it moved up here, and you actually got a reaction out of it. We've got some distance out of it, but here we didn't. We're just kind of fizzing out. We're getting a good movement up, but price itself isn't moving up. So that's a good bearish indication to take a trade once you start seeing this kind of rotate down again. It'll pop up, not come all the way up to the top, just like it wouldn't come all the way down to the bottom typically. So when you see it start to rotate right down, that's a perfect time to get into a trade and take it short. And it may not be much, when you're not seeing a lot of big candle movements like here, a good entry on this is good for a good 60 ticks. Here, I'd probably go for more of a 40 tick range, possibly. And this is just this steady trending all the way down. Now, these are kind of going all over the place because price is going over the place, but we've still got, we don't know which way to go. The stochastics are going to tell you which direction to travel in. So, because price is going up, we might break through, but this is what would keep me. If we got an alignment signal right here, let's say that we got an alignment signal right here. We got a good alignment signal, and price did close bullish through the profit wave, but why I wouldn't take that trade is because of this right here. That trending down is going to keep me from taking that trade. I would prefer to wait till price has already trended all the way down. Everything is now oversold again, and I start seeing the 40 and the 60 start to come up. I'll look for a bullish setup then. I'll take a candle close through the profit wave that's nice and bullish and then take a trade going up. Because now we're trending back to the upside now, so we've got room to go. So any of these good closes through the profit wave, we know we're only at the midpoint, so we've got a good amount of room that price can travel before we got to worry about things getting oversold. That makes sense?
Well, Mr. Benny, could you mute your mic, please? Benny?
Hey, Benny. There you go.
I muted him.
All right, thank you. And okay, so this is another good divert. It's hard to see because I've got scribble over this. So let me delete some of this crap right here. Let me get this. Oops, don't want to do that.
I see what you mean by the pullbacks. For me, what I see is when I see a pullback after the 60 and the 40 go up, there's usually a background change, and then usually whenever the background changes back to green as we're in an uptrend, that's when I see a good entry.
Yeah, because that's exactly what I would do. I mean, once, like, none, because first of all, this is kind of wicking around here. Now, you do get a heads up right here. This is a clear and steep divergence right here because we have the 9 and the 14 are down at this level, and then it's coming here. So if you look and see prices aggressively closing to the downside, and momentum is now carried to the upside, we see the 40 ahead of time, like right about here, we already see the 40 breaking out of the 25 level, and we already see the 60 breaking out of it. So you could technically enter here because it's a divergence setup. That's a really strong indication, but I agree. I would want to wait for the color change and confirmation that the stochastics are now trending upwards. Absolutely. Any alignment, any bullish, like this is a great bullish trade right here. You know, we were kind of going back and forth here, but once we finally closed solidly through this and we're clearly trending up, that's a perfect entry right here. I mean, I take this all day long. I probably did take that trade. That was around 2 o'clock.
So what was your entry there?
My entry would have been
way earlier.
I don't know for sure exactly this is the time frame, but this is exactly what I look for, though. Without even looking at the sell tags, you can see that now we got a huge bullish candle closing through the profit wave because, you know, we were kind of wicking out here a little bit, but I would be comfortable entering on any good bullish push through, either on this candle here or this candle here. I would enter in either one of these because we've got such a solid trend coming up, and we're also seeing these faster stochastics pushing, pulling back, and holding on top of the 60, pointing right back up again. So now I'm kind of expecting this to start going embedded again, and we've got that bullish close through, and we're still trending upwards. And that's really hard to.
My entry would have been that first buy signal
right
after
here,
the trend switch. Yeah, but then I would have got scared because
this pullback right here,
that pullback there.
But this can help you with that here, though,
you can
because
always rely on the 60, right?
Exactly, because that 60 is solidly going up. It's not wavering around. Like here, you kind of see it wavering a little bit. It's not doing that here. It's almost just curly. And this is a nice controlled. I like how when you start seeing these sharp, points down right here, if it comes down and aggressively comes back up and it's wavering all around, this is a nice controlled move down and a controlled move up with no hesitation. So that should be able to help you with some of that confidence of, yeah, you can either, if you were in the trade and then it does this quick little red change again, well, you can stay confident because we've got the 60 holding, trending nicely, and we just simply hit oversold. We got literally overbought here, and then now we're just pulling back. But as long as we hold the midpoint of that and it curls right back up again, we just know that this is just a pullback, a deep pullback, but it's just a pullback to maybe get some stops, running out, and then it just continues up again. One thing that took me a while to kind of learn is that when you see all this, like these red, because this is coding into where all this stuff here is oversold, we're going to crash. Oversold, we're going to crash. But it's not. It's just simply how stochastics are measured because it measures momentum. So we know we've got strong momentum here. We've got some decent candles, and the EMA clouds are spread out pretty wide. They're not like, super thin like right here. That's hard for this to support this, but when they're fanned out pretty wide like this is just simply embedded as all this is. And anytime it pulls back, again, as long as we're holding this right here, I'd be a little scared about this, granted, but these pullbacks here are just simply dip buys that you can get back into or add on to, because they're just gradual, buy that dip and then keep on going up. Buy the dip and it's going to keep on going up. And we're just simply embedded, which means that the 5-minute chart is just maxed out. Now, where you start to see a little bit of a rotation trade where you don't know exactly which way to go would be something like this right here. And I think this is 350. This might have been that one trade where you weren't sure why I took it. You kind of see how they're all grouped together and they all start, like, obviously the 9 and the 14 are going to flush first, but then the 40 and the 60 are right behind it. I think I might have caught this trade when I just seen this big push up here, and then I start seeing price close below here. To me, this is a rotation trade to the downside. Obviously, wish it would have gone a little bit further. I think I got out of it once I started seeing it just not really getting anywhere, but it's still a pretty quick, from entering in where this closed to even like right there, that's still 100 ticks. That's a good freaking trade still. And I'm usually in this for just 60 ticks at a time. I usually do 3 micros and 60 ticks. And I'll try to catch about, 3-4 good setups. And obviously, if we get into a big trend like this and we're holding this and embedded, I'll look for, a good 120 tick trade out of, something that's got nothing, no wicks to the downside. All these are big, thick, good long candles. This is a good 120 tick trade easily. And you can get onto it here. You can get onto it with this pullback here. There's 4 different ways you can make 120 ticks on this one trade. But now, when we get to where we're going from red to green, we're going back and forth, and we're not quite sure where to go to. We kind of see that, we've got a buy signal here, we've got a buy signal here, but we've got the stochastics are still trending to the downside. So I would kind of want to be cautious about really any kind of a trade right here, because you don't know for sure what's going on until we finally get, at least to the 25 level. And now things are rotating upwards. Now we're finally breaking out and we're starting to trend upwards to where if we've got a good, solid close above the cloud, you can go for an entry. But like in this time frame here, it's Asia session. We're at the end of the session here now anyhow. So we know the candles aren't going to be very big, but even with this, that's still a valid entry right here because we're trending upwards. These pulled back right here and then got into the trade. If you got a buy signal through here, you could have taken it and it would have closed out, not very much probably, but if you didn't know if you're going to take a buy trade or a sell trade, well, when we're trending upwards, we're looking for buys. When we're turning down, we're only looking for sells and valid sells. And it's not always perfect. Like this is a valid entry here as well too. We're trending to the downside. We pulled up and then pulled back down again. We did have a pretty deep candle close through here. Now, granted, the real-time price didn't close through the profit wave, so we probably wouldn't have taken that, but it does, it doesn't work all the time. But when you get where you've practiced with it for a while, just like the setup that you just posted there, Jay, when you start playing with it and just looking at it and observing it, even if you're comfortable trading the way that you normally trade, but you just have these stochastics up and you're just watching them, watch how price behaves and moves with them as it does what it does. I think I've been green literally for a month and a half straight. I think I've had green days every single day. And I've blown accounts still. I've got into a trade and thought that I was in the right direction and I added to the contract, and on evals, I'll usually trade, full mini contracts and try to get, right around, 500 to 1,000 a day on the evals when I'm trying to pass them. But last week, I did like 8 $50,000 evals in 5 days. And then I started trading my funded this week, and I've done anywhere from 700 to 800 a day. And today I did over 4,000 a day in my funded accounts.
W. Cruz asks, are you using a 1-to-1 RR, or what's your risk reward?
Oh, usually if I'm
And
gonna,
also, my next question is: are you using the multi-stock on TradingView, or are you mostly just trading on your Ninja setup?
it just depends on what eval I'm trading. If I'm gonna trade, because I could do either or. I mean, because I do like our algorithms on here, but I really would like to try to get your alignments over to Ninja. That would honestly be, I think, that's when I can start trading Ninja a lot more. So right now, any of my Apex accounts, I'm just simply going to trade TradingView. And I mean, I'm a blue collar worker. I drive a truck for a living, so I've got my Microsoft Service up front with me with TradingView up. And if I catch an alignment signal and I see a good entry in the stochastics, I'll throw on a trade. It is typically 1-to-1. I think I have my stop loss and take profit at like 65 ticks up, 65 ticks down, and then I'll adjust my stop loss. So if I enter on a candle like this right here, if that's my entry and I'm looking for something like this to be my take profit, initially my stop loss is going to be equal to what my take profit would be, but I'll usually bring it up below the profit wave. And I'll try to make it like a 1 to 1.5 if I can, using the profit wave as my fail safe. Because if we're closing below the profit wave, and the stochastic is starting to trend down, chances are we're probably going to start flushing. Like that. This would have been a really good, like we could have flushed way down hard here. And especially if I'm trading full mini contracts trying to pass an eval, I'll just put my stop loss below the profit wave. If we close below it, I'll let myself get stopped out. That's fine. Any other questions?
You guys got any other questions? You could always type in the chat or unmute if you want to.
Now, I will say when it comes to stochastics, having them separated like this, like if you notice here, this is the only thing I have. I don't have any of the other stuff with the algos. This is kind of like the SMM algo built into it with some stochastic logic in it. You could spot divergence setups a little bit clearer here than you can with the multi-stock. I will tell you that, because when you have all four of them condensed, it's because you're really only going to see your divergence trades on your 9 or your 14. You're really rarely going to see them on your slower ones, But like this is actually a great example of a quad rotation right here, because all four of them dipped down and then started curling back up again. My rules are, if it's 3 out of 4, that's good enough for me. Like if I know that we see price aggressively come down here and we're holding some previous levels, if I see 3 out of 4 and they're immediately starting to kick right back up again, I'll take that as a valid setup.
Could you go over today's session through your Ninja to see how it looks like?
Yeah, we can do that. We'll kind of start from.
This is actually pretty cool, and this is the one that you shared, right?
Yes. Mm-hmm. And I will find this desktop and I will share the desktop. So I have to find it. I honestly don't know how to find it, but I'll look it up, Google it, and I'll find it again.
How do you drag your screen like that? Because I'm having trouble doing that on mine.
Hold control down. You just hold your control down and you can move the price around like this.
Oh, okay.
Yeah.
I tried that. It didn't work.
All right. So we'll start about right here. I think this is about where we started from anyhow. So
that's a London session, right?
Yeah. Mm-hmm. This will be the London session right here. So this is probably a pretty good entry. We had, a pretty good candle close through here. So I'm looking for potential trades here, especially because we kind of peaked twice and now we're starting to point to the downside. The 60 stochastics are pointing to the downside, the 40. So for me, this is a really good entry. As soon as I start seeing this close through the wave, bearish, and we're breaking these EMAs right here too. And I will say that Ninja does a better job of where the EMAs are actually at, and I think it does a better job of reading the stochastics. That's just the truth of it.
But so you enter off of your arrow and
yes, Yep, you would, as soon as you see this arrow, you see an arrow and a dot, that means we've got a valid stochastic setup, and the arrow is telling us that we've got a valid trade. And honestly, I'm not going to get out of the trade until either the 9 hits the oversold area, or we get a candle that closes up into the profit wave. So if you're aggressive, you wait until you get a candle close to the profit wave. Once I'm at about, $400 in profit, or if I'm trading, full minis, or I see this 9, this is honestly a perfect exit. If you're in a long and you see this, like this is a good example. You got a green arrow, we closed through, and you took this trade long. As soon as you see this, if you don't know, okay, you don't want to give anything back, or you don't want it to pull back on you, which it could have still pulled back and you would have still made money off of it and come back up, and you just found, you would have, priced it to this previous high right here. But another way that I like to do it is, if we get an entry here, as soon as it hits the overbought area, I'm out of the trade. Like, that's good for me. If we enter when it, closes above this right here, as soon as the stochastic hits that, I'm out of the trade. Because sometimes you're just going to get small base hits like this, and other times you're just going to get killer freaking setups, And again, it's not perfect. We've got a buy signal here. We had a green dot, but, we got kind of thin price action right here. We're right up against the clouds, and there's also an EMA that's following us too. So I probably wouldn't have gone long here to begin with, because unless it closed through the EMA, I probably would never take that trade to begin with. But because it came up and touched it and failed it, and now we're kind of like getting smaller candles and we're wicking out a little bit, as soon as I get a sell trade, I'm going for it. And as you see here with the 60, we're just straight embedded. Same thing as you see this. You see the 40 and the 60, and the 60 are just embedded to the downside. So if you don't know for sure where to get into, the algo will tell you where to go to. Follow the EMAs all the way down. I mean, there's a number of ways. It's just what's comfortable to you, I think. What do you want to use as your exit? But stochastics are going to be able to tell you 4 different ways you can play that.
Do you normally play on the 1 minute on Ninja?
Yes.
And then 2 minute on your TradingView?
Yeah. It seems to be a little bit smoother for me on both of that. I tried this on a 2 minute chart. I just like these entries better on a 1 minute. But I will tell you, on a 15 minute, man, these signals are amazing on a 15 minute chart. These arrows, you don't get very many of them, but when you do, holy crap, they are good signals.
Could you give a quick example?
Yeah. Let me see. I think
also that 4, I think 16 signal right there, I think that was an alignment.
I don't know what just happened to Ninja. There we go.
Wow.
All right, so here's the 15-minute chart. And we don't get very many signals, but I mean, look at this. I think this is the right at the 9 o'clock session right here. Look at how we're kind of just trending. We're not really doing much, but still, you can still read the stochastics very well. But you're probably going to pay more attention to the 9 and the 14 than you really are with the 60. But either way, look at some of the settings here, and I mean, it literally gets just about, I think, 8 out of 10, and when you get a signal, they're usually pretty good. Aggressive sell with the red dot, straight down to, God, I don't even know how much that would be. And same thing here, we get a good buy signal, we're closing back through it. We've got green dots showing that, okay, we're pushing up. You finally get the arrow, and that's just, you can stair step that way until you close back down again. I mean, anytime. And you also now got your 40 and 60 are starting to trend up. Your 14 is trending up real nicely. A little more bouncy because it's reacting to these moves here more than these are. That's why these are kind of easier to rely on. Same thing here. We've got a good arrow with the dot at the same time, and it just sells straight off. We are trying to work on getting this converted into a strategy to where you can auto trade this with Blue Knox or Apex. Anything with Rhythmic is what I usually trade Ninja with, is on Rhythmic. And I do know that any of the brokers allow you to automate trading on evals. They don't care about it. It's just the funded accounts. They don't want to see any of that, and they will detect it. But if you can just auto trade these signals here and do a 1 to 1.5 risk to reward, man, I mean, but
yeah. Oh, could you read the chat real quick? You got some questions to catch up on, starting from Adam Phillips.
All right, where
scroll up a bit more.
Okay, all right. The Ninja indicator. Oh, up here more.
Yeah, I think one more.
Okay.
Yeah,
Sorry about that. All right. Yeah, I could do the. I'll pop back into Trading View and do like a recap on everything, guys. I'll do a quick recap back at 1 o'clock and just we'll do a little bit quicker version of it. But yeah, I could definitely give you the entries and then what we use for the exits, Adam.
I think most of us want New York session.
Yeah, that's fine. We could do that. We could just do New York and on. All right. Do you plot the arrows and dots, or is that just a strategy you build? This is about Ninja. You're talking about. I think that's what he's talking about, right? Yeah.
Yeah. I think that's the Ninja one.
Yeah, on Ninja Trader, the arrows are basically a reversion of the algo, and the green and red dots are based on the 60 and 40 stochastic logics. As it's pushing through price through the profit wave, we're getting that confirmation as if we're getting a bullish presence to the profit wave, it'll post a green dot. And typically, what you'll do that for is if you're unsure about the market direction, you don't really know what's going on, you'll usually get more of the green dots rather than just the arrow. So the arrow would be your entry, an arrow with the green dots, even better. But then you usually get a couple of green dots along the way up to tell you, yeah, it's a good, we've got good momentum, good things are happening and pushing through the cloud. Like when it pulls back through here one more time and you still get a green dot, you're going to get one more push out of it. And of course, now you've got this big EMA coming through here and it's time to get out. Because, man, if you caught even from here when it pushed through really aggressively, it started this push through here, honestly, when the 60 finally started curling to the upside. We pushed through here, kind of teetered out a little bit, but then we just kept on ripping all the way up, and then we finally got an entry arrow in the dots, and then just keep on riding it until you either get a candle close through the profit wave or you smack one of a major EMA or previous price. I mean, because you're either going to target this previous price here if you're in this trade, or the EMA. The EMA is going to whatever you're going to hit first is what I'm going to exit out of first, typically. Any more questions on Ninja Trader? I mean, I know that's a lot there, but okay, I know let me go through some of the questions real quickly. Where I have that at, where do we put that at, Jay? It was
it's in backtesting strategies.
Yeah, backtesting and strategies. Yeah, it's in backtesting and strategies, and I posted it up a little ways ago. Maybe if you get a chance, could you pin it maybe down the road?
Yeah, I'm gonna pin this one right now, and then I'll pin the other ones. This is your multi-stochastic. I'm gonna pin that one, and the settings for it. Pin that. So if you guys jump to the message, you can actually scroll up and down in that general area, and you'll see mostly where he dives in everything.
Some of your trades early work so she can learn entries. Yeah, Fisher. I think I did some of the trades. I can't quite remember the timelines because I don't think I have my entries. But it was most of my trades were all pre-market, so we can go into Trading View and I'll just do it was like literally 7 o'clock, so it wasn't like crazy earlier. But let's find 7 o'clock. That way we can go over for Adam. So this is when, okay, this is exactly where I got in at. I seen this big manipulation wick happen. I just turned my tablet on and was looking at it, and I seen this big red candle coming through here with this crazy freaking wick, and then it's wicked back down here again too. And I do a little ICT setup as well too. I would often mark my charts up. I seen that with this wick here, we tag this liquidity right here. So as soon as I seen this tag liquidity, I entered like way down here. And then I got in with, I think, 2 contracts. And I did like $1,000 in one of my $50,000 evals. And then when I seen this finally start to stabilize again, because this came here, pulled back to the profit wave, but it held here, I got back in with my, I have a $250,000 eval. And I traded this here until this previous line. I think this is the overnight open is what this is usually. This little dot this dotted line. I always post the overnight open. That usually price likes to come to that point at some point in time again. But I think I was just targeting where this wick was going to. I was trying to get all the way there, and then it pulled back again, and I got out of it once it started rolling back again. So that was a 7 o'clock trade. I think I got back in here. Yeah, because then I skipped all that was basically most of the trades, and I think I took a couple trades in the morning. So the criteria that we're looking for entering on Adam is you want your stochastics to be like, if you don't know if you're taking a buy or sell, I want to see this 60, this purple 60 stochastic. I want to see it trending up. And I would feel comfortable taking any buy signal or any algo signal. I'd be very happy to take any kind of a bullish trade or a buy signal from that point on. Especially if we're kind of like
mechanically you want it over the 50.
I'm sorry. No.
Would you say like mechanically you'd want it over the 50? I mean the 60 over the 50 level on that graph.
For here, no. As long as it's poking up above the 25, I'm happy with that. Anything above 25, we're moving in that direction. I'm happy with that. Once it dips below the 25 level or the 85 level, that's when I get concerned about it. To me, that's way overbought. Unless it's just flat staying up here, that means we're embedded into a pretty bullish trend or a bearish trend. If it's embedded down here flat and it just doesn't move, you might get the 9 and the 14 bouncing a little bit. We're either going to be just embedded to the downside or embedded to the upside. But once we start, once we know we've got this here, as soon as I start seeing the 40 poke below the 85 level, I'm looking for the 60 to follow. As soon as the 60 is starting to pokes back through here, I'm looking for any kind of a sell trade. And that could be in the form of either a pullback through again and we failed it, and then we close back down again. Good bearish candle close to the profit wave. That would be a decent entry because we're still trending to the downside. But a couple of things that I'll stay out of it. Let me delete these again with hopefully not deleting the stochastics. One thing that I do like about the multi-stock is, all right, delete. There we go. You see how this 9 and 14 kind of like are just going all over the place. They're crossing each other like crazy. That's usually when I'll stay out of a trade because I try to only trade this consistent. I want to see a good long, 25, 30 candles worth of buying, a small pullback, and another 20 to 25 candles of buying. I don't care if it's straight up and down like this, but I at least want to see these steady movements, either straight green and then red and then green and then red, or just see small pullbacks. I try to only trade in these conditions here. I'll usually never trade in these conditions, and I didn't. That's why I stayed out of the market all the way until the very, almost end of the day practically, because when you see these start wiggling all over the place, that means prices going up, down, which means if you enter in, it could come back on you 20 ticks immediately. And then if momentum is starting to carry against you, you'll be 40 ticks down before you know it without even having a chance. So typically I want to start seeing until it cleans up a little bit, which it starts to here again. To me, this is fair trading. They're not huge, big candles, but it's been consistent candles. And now we're starting to smooth out a little bit now. We're getting a nice, smooth, consistent trend to the upside. And we're getting these kind of measured pullbacks. We're coming up, we're pulling back. That would be a good entry right here when it closed through this profit wave and it held really nicely. We still have room to go. That I think is the only thing that's important to me, Jay, is that if I were to only enter right here, or if I enter here in this candle, I would want to make sure that the 60 is trending up, but then we still have room to go still, because sometimes we get up here and then just immediately kind of come back, kind of like we did here with the sell. We gradually came down, did a little bit of a pullback, came down, but then we immediately gradually came and pulled right back up. So we went from a downtrend right into an uptrend again.
Would you say following the 60 downwards is like a nice channel, and then once we break out of that channel, the 60 and 40 start to go up with a buy signal off of a retest?
Absolutely. And this is honestly a pretty good, this is kind of crappy price action right here, but it does get the point across. So you've got a steady downtrend here, and then now the 60 has been trending downwards. Not the best because this is horrible price action, but we did have a consistent trend down with the 60. And then now that we're breaking back out of this channel back to a bullish area again, absolutely. Any of these re-entries right here would be a perfect time to do it, because now we know we can expect a consistent, channel that price is going to stay within. It's not going to go all crazy up and down, 100 ticks like it does here. So we've got to move down because the 60 is telling us that. Then we gradually come right back to the upside. So absolutely, any major close through the profit wave with a pullback like right here or right here, you could re-enter in any of those, or wait for a buy signal. Like, you may miss this one, but this is the better setup right here to begin with. And this is 120 ticks. You could probably get 120 ticks off of this 4 times probably. You could have got it here in this pullback, here in this pullback, here in this pullback. Absolutely. Let's see. Do we have any other questions? Let's see. Okay, we did that earlier. What's the arrow? I think I answered that question. That. Okay. Yeah, I think that's it. Anything else, guys? Which I do want to thank everybody for coming. I know everybody works. Me too. I usually do 14-hour days, but I mean, thank you all very much. I'm really impressed with how many people came in and wanted to learn. So I really appreciate that. What's the big number on Ninja? I don't think I follow it.
Oh, you have like a big green number.
A big green number
on your Ninja chart.
Oh, okay, yeah. All right, yeah. I will answer that right now. I will find my desktop. This one right here. What this will do, this will tell you currently what are we at price-wise, and it is telling you what's happening now. So you actually want to find out where we're at now, because we never really did kind of go through some of the price action here. But what it's telling you, let me squeeze it in a little bit because it's a little ways away. And this will come into the desktop that I share. This will come a part of that, and that's actually a really cool feature. So if you're, again, this tells you the score, and this could go literally to like 400. It'll be a red negative number if it's on a downtrend, if we're, completely going down. But if we're trending to the upside, this will be a positive number, and then that kind of helps you see, okay, what do we want to take? Like, this was a good entry, I thought, right here. Even for Asia session, this was a pretty good entry. We've got some green dots. We're staying above the profit target, and we're getting an arrow here. We did get a pullback, so you may have gotten closed out here, but this is a perfect entry. That's a good 60-tick trade right here for Asia session right here. But that's what that number means right there. That's your score of your overall trend in the market. I guess you can call it a trend score, I guess is what you'd say. And I'll find that desktop and I'll share it. I do know it's a zip file, and you have to put it into like your My Documents bin, and then it's somewhere's in there. I'll find it, and then you import the desktop. So I'll find out exactly how I did it, because I honestly don't remember, but I'll figure out what I did to do it, and I'll have instructions and everything for everybody, and I'll have that zip file in the folder there for you guys. But yeah, this has been recorded. I will try to get this uploaded to YouTube. It's been a while, so I may have to break it up a little bit, but I'll try to get this recording shared. I've got just a personal YouTube channel, so I'll try to share the link for you guys, so that way if you have any questions, we've could have gone over this. And I'll try to do a more concise version of what we've done too, just to give you, entry, exit criteria is what we look for. So I'll get that done too, man.
Yeah, and if you guys have any questions that you may not have now, but if you watch the video and you'll have it later, you can also just post a comment there and all that, and just ask some questions there.
And I'm always on Discord. I mean, like I said, I'm a blue-collar worker. I work 14-hour days, so there may be a day I may not be in there, but if I don't make the AM session, you can bet I'm going to be around in the PM session, so I'll definitely be around.
Yeah, that would be nice. Yeah, if you could hop in the voice channel in PM session and do a little, just what I do as well, live stream in the morning, and then you can live stream PM. that'll be awesome too. Right. I'll give you. I mean, you already have live stream access anyway, so.
Okay. Yeah. No, we could do some live sessions, especially in if I know I've got like a good 45 minutes to an hour. I'm happy to either trade in Ninja or trade in there and just do some live trades. Find some live setups. So absolutely, we can do that
for sure. Oh yeah, Adam. I will. Yeah. Let's get a stochastic thread going on. I got you on that one.
There you go. That's a good idea.
Let me post up a channel for that. That'll be pretty nice. And yeah, I mean, we don't always have to talk about alignment on this server, guys. This is literally my YouTube community server, so we could just talk about anything, honestly.
I think talking about anything that could make all of us money, I think is a good conversation, honestly, because this is I mean, I never believed it. I've watched, I think, a good 4 friends of mine that have been trying to trade with prop firms, and it's a good idea. And a lot of people fail, but the people that have made it have literally just gotten themselves like 600 accounts, and they'll trade 3 accounts at a time, trying to make 200 a day. And it could take them, if they make $100, they make $300. It could take them a month to get the things passed, and it could take another month to hit to your profit target, and then a third month to finally get yourself above that $2,500 level. But after that third month, and it sounds like a while, but it's steady, it's slow, it's rules based. If you've lost more than 2 trades in a row, you're done for the day. Once you've won 3 trades in a row, you're done for the day because you're not over trading now. So there are rules that several of my friends have made that, have done that, and have gotten, several $1,500 and $1,800, payouts from Apex. And then they'll take some of that money and they'll get into some of the cleaner, prop firms like Take Profit Trader or MMFU, that they have just easier payouts and less rules and stuff like that. And then they're bumping it up to, $6,000 and $10,000 payouts. It does happen. You can break out of it, guys.
Yeah, I'm currently in that bump right now. I'm not gonna lie. I haven't even passed my first eval account yet. I'm still on my first one right now. So, and I just got an Apex account too because of the sale.
Yeah, Apex is good for that. They may have some stringent rules, but dude, I think I got like 10 Apex evals, and I think I passed 8 of the 10. No, 6 of the 10. I think I passed. So not a great success rate, but I got 6 out of 10. I'm happy with that. Thanks, Adam. I appreciate it, guys. I really appreciate it. We're just kind of chatting and BSing now, so if everybody's got to go, that's cool. I understand that. It's no big deal, man. Thanks for coming, everybody.
Yeah, for sure. All right, y'all. You guys have a good night. I'm gonna head to the gym.
Yeah, me too. I'm out of here myself too. I'm up at 3 a.m, guys. All right, man. I appreciate everybody.
Yep. Good night having you here, man.
All right, thanks, man. Have a good night, y'all.